This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradley above at the top of the screen. Today, the Ripple IPO watch and the numbers are called to you by Ledger Nano and Ledger Nano S and X. Guys, you can save up to 50% on a backup pack for Ledger Nano. Make sure you check them out. Protect your security offline. Cold storage with, or protect your crypto rather, offline cold storage with Ledger Nano or Ledger Nano S or X. So make sure you check them out. There is a link in the description for that. And Pure VPN, guys, many different layers I use for my security protection online. Cold storage is one, and Pure VPN is another to hide your anonymity online, as well as other things. But check it out, 7-day trial for 99 cents, guys. If you haven't done that, it does make me feel a lot better when I'm online, I'll tell you that. Ripple IPO watch, nothing new here, but we do watch this often. You know, a few weeks ago we did report on the trademarks and everything that had popped up with Ripple Impact, which is a charity, and Ripple X, which is extracurricular courses to help entrepreneurs in this particular area of industry, building on the ledger and projects alike. So we will keep an eye on that going forward in the future. All right, so now let's get to it because we have a lot of heavy stuff to talk about today. Shout out to Michael Val 5 Links, XRP Crypto Wolf, DJ Peter Vass, and all the usual players who send great information to all of us out here in the space. So the U.S. is about to embark on a very ominous journey into hyperinflation with record amounts of debt and deficits. The latest Q2 2020 budget deficit numbers for the United States have been released, and they don't look pretty. We're going to take a look at that, and then we're going to compare some remarks that were made from last year from Mark Carney of the Bank of England. Let's get started because this is really important to look at, even though it hurts to see. The deficit to outlay ratio topped 60% above hyperinflationary threshold of 40%. Q2 2020 GDP shrank 31.7%, but will improve in Q3 2020. Delinquencies are on the rise on record high corporate debt. U.S. dollar will lose value due to ultra-low interest rates and quantitative easing. Gold is the only safe haven. Well, that's where we differ there. You know, on Friday's show, and shout out to co-host Cryptopolis on Friday's show, he made an incredible remark and comment and of observation that in this time of inflation and what appears will quickly move to hyperinflation if they're not careful, he proposed that the escalation of people fleeing their current positions financially, whether it be stocks or otherwise, and moving not only into metals now but into crypto, because crypto is currency and can be spendable around the world. This could exacerbate and accelerate the inflationary situation and help carry it to a hyperinflationary status much sooner, basically. And I would agree with him, and it is remarkable how that could impact the world in that way. Let's move through this document pretty quickly, and believe me, these numbers are staggering. The U.S. is about to embark on a very ominous journey. We see that federal government expenditures annual rate have ballooned to $9 trillion, while the federal government receipts annual rate have dropped to $3.5 trillion. Quite a disparity. And look at this chart here. Look at the chart here for expenditures. Just absolutely parabolic. And they're just going the opposite way. Look at that. Unbelievable. This resulted in an annual adjusted budget deficit of $5.5 trillion, which is shown in the chart below. It's completely unprecedented. And it doesn't look like the expenditures are going to ease down as many businesses, airlines, event sector, and hospitality industry still struggle due to the pandemic. If we calculate the deficit to outlay the ratio, we get 60%, which is higher than the 40% inflationary threshold. You see here, the latest Q2 GDP data was equally abysmal. The U.S. economy shrank 31.7%, while the U.S. stock market kept rising because they kept printing money to buy up all the corporate bonds and stuff like that. So that's where you get that false economy from the numbers in the stock market and how the money bottlenecks at the top and doesn't get down to the consumer. Okay, which we've heard Ray Dalio talk about on this show. We've covered him quite extensively here. This has resulted in a surge in the total market cap of GDP Buffett indicator to 183%, which clearly indicates stocks are overvalued here. Q3 2020 GDP is expected to rise by 26%, according to the Atlanta Fed. So this ratio could come down going forward, but still obviously not enough to handle the disparity that's shown here. So one of the things I wanted to talk about here is which the clearly indicates stocks are very overvalued here. This is where you get that fleeing when the people finally realize what is taking place and where the printed money has gone, to create a false sense of well-being. They're going to jump ship. And where will they go? And I think that goes back to what Cryptopolis' remarks were, where he pointed to the fact that, yeah, metals is a normal hedge for a lot of people, but at the same time, cryptocurrency allows you to spend money throughout the world very quickly, very easily. Now, I realize that there are gold coins that are digitized and out here on the market, but the reality is cryptocurrency is really grabbing hold. And if you have fear motivating people to move their money and their investments to somewhere else, I think they're going to want to go somewhere else that they feel very safe. And I know metals is obviously a go-to, but people will always want to be able to have the convenience of being able to spend and access their funds very quickly without any hassle and with ease. Cryptocurrency allows that to happen, and I think it could accelerate this entire situation. So ultra low interest rate policies have created a stock market, bond market bubble. And this is horrible because we know that if the bond market is in trouble, then the money's in trouble. The bond market is the backbone of the monetary system, period. And that's where you know you have some huge problems. So this is going to come home to roost at some point here, and more bad news coming off of this. So the Federal Reserve has only managed to drown U.S. businesses in more debt, and delinquencies are rising on record corporate business debt levels. In fact, the Federal Reserve is not done yet. August 27th, Chairman Powell announced that he will let inflation run hotter than normal and keep interest rates at zero for an extended period, 5 years. In order to achieve this, the Federal Reserve will have massively increase its balance sheet and more asset purchases, and even sending money directly to businesses. Current bubbles will only grow larger and larger. Stocks will keep rising as the Federal Reserve pumps money into this sector. Unbelievable. Now, let's keep this going. Gold Telegraph: throughout history, when a country prints endless amounts of money in order to finance its own debt, it eventually leads to inflation or hyperinflation. Happened in Germany, happened in Zimbabwe, happening in Venezuela. Oh, but it's the United States. It can't happen here. Oh, okay. You keep thinking that because it's already started. When 2019 Bank of England Governor Mark Carney declared to assembled central bankers that a corrective was required to the destabilizing influence of the dollar in the global monetary system, it was clear something was afoot. This is an incredible article by Philip Middleton. Talks about digital fundamental threat to the greenback, and he goes back to the Jackson Hole, Wyoming, when Mark Carney spoke last year and talked about a synthetic hegemonic currency to replace the global reserve status of the United States dollar. Now, this is coming from the Bank of England, out of England, which is an ally to the United States. This isn't like Russia or China saying this. It's got a lot of weight to it. So now let's go back down here, and yet a perfect storm produced by the convergence of geopolitics, technology, social change, and the pandemic crisis could bring about a profound shift. The Washington Consensus and Bretton Woods arrangements, which have governed the world's financial architecture for the last 75 years. It is, if not irretrievably broken, are in need of drastic repair. This does not look forthcoming. The U.S. share a global trade has halved over the last 30 years. Use of the dollar as a reserve asset has declined. Gold may be making something of a comeback as a store of value, if not a means of exchange. We do know that there are some gold tokens that have been created out here in the market in the digital asset space, as well as on the ledger. So keep that in mind. So the combination of massive fiscal deficits, inflation, and low treasury yields may also diminish the currency's attractiveness as an investment class. The greenback has no natural right to financial hegemony. I mean, this is absolutely a direct statement that the greenback, the U.S. dollar, has no natural right to be the global reserve currency. There are growing signs that other countries no longer wish to acquiesce to it, and some are seeking to oppose it. This has been reinforced by increasing willingness of successive U.S. administrations to the U.S. dollar's pivotal role in global financial system as a policy weapon. This has stoked much antagonism from allies and enemies alike. They are now concerted efforts by countries of both persuasions to reduce the reliance on the dollar through measures ranging from barter to use of other currencies to the investigation of attractiveness of cryptocurrencies. I will remind you before I read the highlighted section here that the IMF last week had a webinar in which they discussed an external adjustment to dominant currencies like the U.S. dollar against the exchange rate peg, which means that they are discussing how to debase and revalue the United States dollar against every other currency in the world according to the exchange rate. Massive implications there. When in 2019, Bank of England Governor Mark Carney declared to assemble central bankers that corrective was required to establishing influence of the dollar in the global monetary system, it was clear something was afoot. Whether his proposed solution, a synthetic hegemonic currency, is the right answer is less relevant than the fact that the question has been posed in the first place. But perhaps the fundamental threat will come from the growing recognition, which has been given an enormous boost by the pandemic, that current payments architectures are not meeting the transaction needs of the digital economy. It's at this point I remind you, what has Ripple been doing this entire time? Building the architecture and the market infrastructure for the digital economy between financial companies and institutions and banks. For a variety of reasons, the use of cash is declining rapidly in many parts of the world, and a search is underway for digital alternatives. There will be a growing use case of community-based currencies, the Bristol Pound, the Wexel Digital Groat, the smartphone token, and the gaming currency. In a world of myriad of private and fiat currencies, some narrowly specific and others more widely and generally accepted within domestic economies across borders, citizens will carry digital wallets containing means of payment linked to many different financial jurisdictions and polities, both public and private. Major actors in this new world of digital money will be sovereign issuers, while the introduction of a synthetic hegemonic currency might require the prior establishment of a world government. While the introduction, you listen to this? While the introduction of a synthetic hegemonic currency might require the prior establishment of a world government, it is not fanciful to envisage excuse me, it is not fanciful to envisage a digital renminbi currency zone along the Belt and Road, a digital euro serving the needs of Europe and its eastern neighbors, and a digital sterling operating outside the UK. Reliance on the dollar would be sharply diminished in this world. If the Fed wishes to maintain the dollar's power beyond the U.S. borders, it might do worse than commission a Silicon Valley giant to offer a digital dollar to its billions of users worldwide, or face the prospect of 2020 being the year when the dollar started to surrender its supremacy. What do you think about that? There's a perfect storm brewing out here. And in the face of that, we see Visa acknowledging. Senior Director of Policy said Federal Reserve Chairman Powell's speech on inflation will be one for the history books. Never in the history of mankind was so much stolen from so many by so few. Opt out with Bitcoin. While that's happening, Brad Garlinghouse said the Federal Reserve inflation action flies in the face of decades of precedent. Signs point to further U.S. debasement, devaluing in the near term, leading to further diversification of assets, which will certainly be good for crypto. And knowing that while that's happening, we see Craig DeWitt, Ripple Director of Products, said Ripple wants to replicate its success in the U.S. and Mexico ODL corridor to more places across the world. Ripple is accelerating its expansion plans, so they're hiring more people as they expand to new corridors. In the worst time on the planet, for the economy and jobs, Ripple is accelerating its expansion plans, and they are hiring more people. In times of crisis, recession, depression, and things of that nature, there's always new innovation and technology that arises from these events. Ripple, XRP, I believe, will be one of those things that arise out of the ashes of an old world and bring us into a new world. I think seeing this is absolutely a perfect storm. And I want people to remember out here while we're talking about it. Because of the terrible situation economically and globally speaking, as well as domestically, you and I may find that we are wealthier than we ever have been sometime not too far in the distant future because of our investments, because of our ability to stick through the bear market. We may find that we are wealthier than we ever have been in our lives. But I fear it may be while the rest of the world is in the greatest level of suffering that they've ever seen. Unfortunately, I think this is the scenario, because if you look at what Ripple has been doing in building the market infrastructure to bring us to a new digital age, if you look at the fact that XRP actually can do what it says it can do and serve the world's needs in the manner that it says it can, I don't think we're far, because we've also heard Brad Garlinghouse talk about the fact that Ripple XRP cross-border payments product is in such demand that they currently can't facilitate it at the current price, which means the price needs to go up. It would also, in my mind, mean that it needs to get a designation or a classification as soon as possible, so it can help serve the needs of the world, so it can help take some of the burden off of the U.S. dollar and the global reserve status. I believe that the U.S. dollar can remain a unit of account, while XRP can become the means of exchange, the medium of exchange, and a store of value. I believe it could sit in between all the currencies of the world and allow the exchange rate to bounce off of a neutral asset that sits in the middle of it, of all the currencies and all the tokenized things of assets of value of the world. This is just my view, but this looks like where we're going, and it looks like a perfect storm for a company like Ripple and an asset like XRP to absolutely excel and help shorten the pain that we are about to feel, because I don't think it's even truly begun. I really don't. Until we see inflation really ensue and then possible slip into hyperinflation as well, that's when you know the pain is in full effect. I wish it could be happier, but this is where we are. And I think, as retail investors in this crypto asset space, and specifically with XRP, we have to look at the entire global economy and see how it correlates with what's happening with the digital innovation and the digital asset space. All right, guys, that's going to do it for me. Make sure you hit the like and subscribe. Share with somebody you know. I'll catch all of you on the next one.